This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. I'm going to give you a stock market update. It's Thursday after the market has closed. I know the Fed is coming out in the morning. They're going to be talking, and so there's probably going to be some volatility. I don't have the luxury of seeing what the futures are going to look like. But the reality is we probably won't know anything until the Fed starts talking. Just expect a lot of volatility over the next day or two, I would guess, based on what they have to say. It seems like a lot of people are hanging on every word that they have to say. So just kind of keep that in mind as we're looking at this. We're going to go ahead and start out with volatility. And I want to just touch on this and make sure it's one of the key market conditions that I keep an eye on. And I've got the daily chart up of the average true range 20, going back 20 days. And the blue line is an 18 MA of that ATR, that 20-day ATR. So I went back to the daily one because I wanted to show how blatant this is in terms of the reversal. And once we're below a declining moving average, and then it actually moved up here, and this was still declining. So it turned to neutral, and then it went back to negative, or positive, I should say. When this turns down, that's a positive for the market at this point. Okay, so I talk a lot about having like a 1, 2, 3. This was basically a break and then a test, and then it came back down through here. And at that point, we were below a declining moving average line, and we have been ever since. So that is acting as a positive in the market conditions. It's a good sign for the market. Now, what we want to be able to do, I think, is, you could draw a trend line here. I think the moving average does just as good a job. And we're looking for this to break the moving average and start to turn this. If it's flat, if the moving average is flat, then it's a neutral situation. If we turn this to rising and we stay above, then it turns this part of the indicator or part of the market conditions back to negative. Now, this is a lot more sensitive than what's going on the weekly chart. I'll just show you the weekly, but I don't know if you remember about a month ago, I showed you this chart and I said it had made such a big move. And if you look at the periods where it makes these big uninterrupted moves, that it's probably due for a pause or a pullback, and we're doing that. Now the question is this truly going to give a signal where this rolls over and we fail like that and we get this going to the downside? That would be more of a bullish sign for the general market. My guess is that we're not going to get that. I think what's going to end up happening here is we're going to trade around in this area. I'm going to get into my thoughts on the overall market, and it'll make a little bit more sense. But just if we're looking at this one indicator, so if I'm looking at it from a weekly standpoint, I've broken the trend line and I'm breaking the 18. But what I need to have is a test and then failure, a 1, 2, 3 reversal on that time frame. We already did that on the daily one, right? I mean, we're definitely trending down. We've reversed the trend. We tested it and then turned down. So now if we're going to reverse this and turn it back to negative, we're going to need to see more volatility now. Okay, this recent action isn't really having that big of an effect on the average true range. So this is a very good thing to stay on top of. Keep this in mind. I would reference this at least once a week. Just have a chart like this and make sure you're taking a peek at it. I have only been bringing it up about once a month, but I'll probably start referencing it a little bit more often on these Friday reviews, just because now we've got such a long trend in place that is bullish. If we're going to get some kind of get in danger again, I think we're going to start to see the volatility and the ATR start to turn up. Okay, so let's go ahead and get into our analysis on the overall S&P using the spider. And so before I even get into any individual time frames, let's just look at what's going on here. So look at the MACD. It's kind of funny. I mean, we got these lines going this way on a monthly. On the weekly, they're doing that. On the daily, they're doing that. And then this one, yeah, they're doing the opposite again. But this one is a little less important to me. This is more of a trigger time frame. It's not really what I use to identify and analyze. So I'm using, every now and again, this can become important because we want to focus on the average, the ADX and the MACD periodically. And we do want to look for when the volatility really skyrockets again, we want to look for changes in trend, 1, 2, 3 reversals that take place on this time frame, because that can give us a heads up. But right now, because the volatility has been shrinking, it plays a little less role at this point. Now, with that said, we've got monthly MACD lines going one way, weekly MACD lines going the opposite direction, and then the daily lines looking more like the monthly lines now, going through a correction after getting overbought. These are going through a correction, upward correction after being oversold. Okay, so what I mentioned over the past few weeks is that my thought process on this whole thing was, because this was pretty strong, the likelihood of just kind of falling apart here was not all that likely, that we would make some kind of a retest or consolidate a little bit. And now what we've done is we have broken the trend line, right? And now we're trying to create a 2. So, I mean, it's a little early to call that a 2. It's pretty close. I mean, we get any more upside action here, we can just do the fib grid and see. I usually use a 38%, 33% as kind of like a minimum. And it did get to the 38% retracement. So we officially, way I look at it is this qualifies as a 2. Because you retraced from that decline, and I didn't do it exact, it's pretty close though. Once you've retraced back to the 38% retracement, then you can call that a 2, especially if it happens in the area of an 18 that's starting to roll. Because if we look at all the moving averages, notice what's going on. We've got the monthly rallying up and sort of failing at the 18 month after bouncing off the 40. Right? The weekly is pulling back towards the 18, which is starting to flatten out the opposite way. This is starting to flatten out from being up. This is starting to flatten out from being down. And we failed at the 40 in this time frame. So we're bouncing off this 40 and we're failing at this 40. And now the question is, do we do the same thing here? Do we come down to this 40 before maybe getting a decent rally? But right now we're getting a decent little move off this low. The question is there follow through, and see how see what happens when this hits this gap. But just generally speaking, when I see that kind of strength going up and no divergence in the green at all, green made a new high with price here. It's generally, I just don't expect this to just kind of fall down and this go all the way down to 4,000, which is kind of the target, I think, for this move. Somewhere around 3,900, 4,000, something like that would be the target if this wants to continue to correct. Now, the other way this could play out is that we could get a decent move up here and it channels a little bit and maybe corrects a little bit more. I think we've actually pulled back a decent amount, but I don't really want to see this turn up quite yet. I'd like to see the moving average cup around. I'd like to see a little bit better test of the moving average. So even if we can go sideways for another week and have this cup around, I'd feel a little bit better about any kind of upside break. But let's just talk about this for a second, because remember, we've got an 18-month right above. We went up and tagged the 18-month line on this rally. Okay, and we've got our trend line right there. We've got the 40-week right there. But the other thing that I haven't mentioned is the fib grid. And we can put our fib grid up here, and it is just in between the 50% retracement and the 62% retracement. So if we turn up from here, so if we have the ability to get this, especially if this can pause enough to get this to cup around and we can make a higher low here and turn up through this, I got to believe that's very important. Now, the way I look at it is I don't think it's important to the degree that we go busting out to new highs. But it could work its way higher and really test this resistance up here and maybe even make it to a minor new high or something like that, potentially. There are signs of improvement when you look at the individual stocks out there. So I'm finding a lot. I've been able to find this week when I posted for the ideas for my subscribers, I found a lot of individual stocks that met my criteria. I was really surprised. It's probably the biggest list I've put together this year. So that's interesting from that standpoint. So now we've got, if we take out that high, we have to have respect for what that's telling us. Okay, what that's telling us is that we've essentially done our 1, 2, 3. Now, again, the reason why I really want this to pull back a little bit more is we really can't call this a 2. You know, I mean, you could, if you consolidate long enough sideways, then I would be willing to call it a 2 because we get a little closer to the 18. But doing it from here, from this juncture, would be really hard to call that a 2 and a 1, 2, 3 change in trend. But we have broken the downtrend line, and we are in the process of cupping around on the 18. So I think it would play out a little bit better if this is really going higher. I think this looks better if it comes down and tests a little bit more and then gets the 18 cupping around, gets a full-fledged at least 38% retracement of the up move that's been made, and then come up through this trend line, come up this prior high, come up through the 618. And now we've got a pretty solid foundation for some kind of a reversal of the downtrend. But I've studied this a lot, and when we get a bearish signal off the peak like this was, very bearish signal reversal, and then we get a reverse of that here, we've kind of like formed a range where we got a bullish pattern here and a bearish pattern here, and we could spend time channeling between these two lines. I know guys are calling for big moves to the upside and other guys are calling for big moves to the downside, and I know I mentioned that the last few weeks. But the reality is that we could do neither of those, and it could turn into a stock picking environment. And you better, have a pretty good idea of what types of stocks you're looking for, because I don't think you'll just be able to buy anything. It looks like it's more of a stock picking environment where some stocks will win and some stocks will lose. So just kind of keeping that in mind as we go through. And now, the only other thing that I'll tell you is, and I want to make sure, let me take this fib grid off. I want to make sure I explain something. I know we have basically a pullback and an uptrend, but we did break the trend line. But let's say we're just looking at this as, okay, we're pulling back into the zone inside these moving averages, which are still rising, technically rising, even though this is losing a little slope, they are still rising. I don't consider this a trigger to get long. I know I've said that if we close above both moving averages, that constitutes a trigger. But when you've gone through a full-fledged change in trend to the downside like this did, this was no doubt in a downtrend on this time frame, we have to reverse that process, and I'd be looking for more complexity to the reversal. I need some kind of a test and reverse. We haven't really tested this 18. I want to see that happen and then take out the high, and then I'd feel a little bit better that this is truly, like a trigger to get back in, something along these lines. I'm more inclined to believe that this is a trading range that's forming rather than the start of a big move. Now, one of the reasons I'll say that, just to finish up here, is because the MACD has rolled down. I've got these lines going downward as this is rallying up. That is just like what was happening on the monthly chart, and what I said was it's very difficult to just keep pushing up against these lines because the momentum is going in the opposite direction. So we've got this positive and this negative in a way, and what I would tell you is most of the time you'll come up, rally to the 50%, 618, and then come back down and form something like that before you're really ready to break out or break down. So those are the types of things I think I'd be watching right now. Stay fluid with the market because how this reacts here over the course of the next week or two really could determine how we spend the rest of the year. All right, go ahead and post any questions or comments, and we'll see you next time.